Hey traders, it's Jeremy here, and in this video I want to give you a breakdown of this sell setup I took on gold yesterday before the market closed, and also give you a breakdown of trade opportunities that you might have missed early on this week on gold that you could have taken. So starting on with the bias for the week, the target for the week. Now early on every week, every Sunday before the market opens, I usually hold the market review with my community members, and on this week's market review I let them know that at the time the target for the week was this sell side liquidity. Currently I termed it daily OB because after price took it out it became an order block, right? But at the time it was termed weekly sell side liquidity. Right, and the reason for that was because this last week's candle was bearish, and it was closer to this low than it was to this high. So it made more sense for price to come and continue in last week's direction, taking out this low, right? And so that was what we were watching out for. And we had structure, we had possible sell setups on the 4-hour time frame and 1-hour time frame to actually support that claim. Basically, this was Monday this week, this week, and this was the price action we had. Now we had this sell setup, support this structure here, supporting a sell at the time. All right, within this order block here, we had price come into this order block at this point from last week, and we saw price reach into it but although it seemed to be ranging on the 1-hour time frame. If you observe on the 1-hour time frame, that's where you'd actually see it more clearer. And I want to show you first about 2 entries that you could have taken at this point on gold that I missed personally. And the reason why I'm showing you guys is so that you can see how to spot these opportunities, and so that you don't miss them. Alright, so this was Monday. This was Monday's price action. Monday opened up into this area right here, into this region right here, and then this was the first indication that we're going to see a sell. This bearish order flow leg right here. You can see we had this large engulfing candle, and it had a fair value gap. Now this is a bearish order flow leg, and the kind of fair value gap that price created here is a kind of fair value gap called a retracement gap. And you see price retraced into that fair value gap on this candlestick here, and then started selling. Now initially, normally on the creation of this order flow leg at the first time in the market doesn't really give a very high confidence that the market is going to say sell. So usually you would ignore this to see if price still creates further structures to support the sell bias, and then price did just that right here by creating another bearish order flow leg in the form of this, right? And the kind of fair value gap that price created here is a kind of fair value gap called a breakaway gap. And for breakaway gaps, you don't trade from the gap, you trade from the order blocks or the mitigation blocks that overlap with that gap. And so this was where you could have gotten an first entry on gold in the new week to target the weekly sell side liquidity. But this was something that I missed because I was not paying attention. I wasn't focusing. I was doing other things when I should have been paying attention and focusing on the charts. So I missed a wonderful 1:6 hour move. Right, and then price even gave one more opportunity. We see that now at this point, price has already started creating bearish market structure. We had this high, low, lower high, lower low, and then lower high. Right, at this point here to create this lower low. And so it only stood to reason that price would retrace back, because the kind of fair value gap that price created on this impulse move is still another breakaway gap. And for breakaway gaps, remember, you don't trade directly from the fair value gap, you trade from where it overlaps with an order block, mitigation block, or breaker block. And so the perfect region to taking another sell in this market would have been from this order block right here. But for some reason I just assumed that price was not going to come this far, and I slept off, and this happened at midnight, if I'm not mistaken, 1 a.m. early in the morning. Right, price came back here and sold, and these were opportunities. These were the prime opportunities in the market within the week. Every other opportunity was lower probability. Right, these are the clear-cut opportunities that we had in the market within this week to join in on the sell on gold that we missed out on. Right, so we could have gotten a 1:6 at this point and a 1:3 point at this point, totally 1:9. Right, and if you even caught this move, this is a retracement gap. For retracement gaps, you trade from the gap. You don't have to wait for another block, mitigation block or breaker block. Right, that's why you could have gotten an entry. If you had targeted the 50% level of this fair value gap, you could have gotten in. Right, and then price sold this far down within the week. The price continued to sell and sell and sell until we got to this point. Now I'm still bearish on gold because higher time frame market structure is a bearish market structure. Even though, or I think from Thursday we started seeing price giving bullish price action from this point here. Now it's still yet to be proven whether we are exactly bullish or not. We'll have to wait to see whether we are really bullish in this market or not. But if we are to go by the market structure we see on the higher time frame, you see that it makes more sense for us to be bearish, and this is where the sell or the trade idea or the sell I took yesterday Friday before the market closed, this is where the trade idea comes from. Right, so this is on the daily time frame. Now we have a very clear bearish order flow leg, or what some of you would call an impulse move. I call it order flow legs because order flow is a better way of interpreting price action. It gives you your point of interest, direction, and intention all in one package. So this is a bearish order flow leg, right? This is lower high to lower low, and the kind of fair value gap created here again is a breakaway gap. And in breakaway gaps, you don't trade directly from the gaps, you trade directly from where they overlap. It overlaps with an order block, mitigation block, or breaker block. And in this case, this was a daily mitigation block, although I termed it order block because mitigation blocks and breaker blocks are simply order blocks on higher time frames or lower time frames. And so this is a mitigation block taking the week. Now for mitigation blocks and breaker blocks, you take the week when the week directly overlaps with the fair value gap. But if it doesn't directly overlap with the fair value gap, your point of interest at that point is the body of that mitigation block or breaker block, right? So, but in this case, the wick directly overlaps with with the gap of the breakaway gap, and so that's where the point of interest is. And you see, on yesterday Friday, price retraced to this point, right? You see where price got there, and immediately we start seeing bearish movements, bearish intention. Now, on the 15-minute time frame was where I took my entry from, after price had rejected off that daily mitigation block. Now take a look at this. This is price. This is the reaction of price from it. Then we had brief displacement, right? And this displacement is a bearish order flow leg because we have a fair value gap, right? And price came back again to retest the demand at this level, and then from there we started seeing the creation of bearish order flow legs, and that's where I took my first entry from, because we had this first lower high to lower low that price created right here. This was its lower high, lower low, right? And the kind of fair value gap that price created in this instance was again was a breakaway gap, right? And for breakaway gaps, you trade the line just now. You trade directly from where they will overlap with a mitigation block or breaker block. This is a mitigation block here on the 15 minutes time frame this week, because it directly overlaps with gap. Right, because the wick directly overlaps with gap, that becomes your point of interest, and that's where I took my first sell from 15 minutes mitigation block. And then second entry was price. Now, if price is going to continue in a certain direction, it is expected that we keep seeing the creation of order flow legs, right? And if a valid order flow leg is an order flow leg that has a fair value gap, and we have the creation of a valid order flow leg from this point here, lower low lower high to lower low, right? And we had a fair value gap created on it, and the kind of fair value gap that price created here in this instance is a retracement gap. And for retracement gaps, you can trade directly from the fair value gap they will hold, right? And so I took my second entry on this from the retracement gap. That's where I placed my entry at the 50% level of the fair value gap, right? And stop loss just above this point, and voila, we had this. Now I'm targeting this low right here. I'm targeting this low right here just to be safe, just to make allowance for price actually turning bullish. Right, I've not done my analysis for the new week to support the bearish bias, but following what we've seen this week, there's still possibilities that we are bearish. And then there is, if we are following this logic, what we see here, this price action, we have lower high, lower low, lower high, lower low, right? And it's possible for us to get a new set entry even on this at this current point, because now currently at this point here we have a breakaway gap created, and then we've got this order block right here, right? This order block that directly overlaps with the gap, right? So we could be watching for a third sell entry at this point when the market opens on Monday morning, targeting this low again, right? And overall we'll be having, this is 103.6, 102.55, 102.75. so overall almost we could be having almost around 1:8 up to 1:8 total on this entry, right? And if you get this, if you start Monday off with this kind of trade entry or with this kind of wins, you of necessity will not need to actively find new trades to take for most of the week, and you can just patiently wait till you see your setup again if you actually do see it and take your trades. And so this is the breakdown of the trades I wish I had taken in within the week, and the trade I actually ended up taking before the week ended. And so I'm hoping that this breakdown gives you a better idea of how to interpret price action, especially on gold. And if you find this video helpful, like, follow. If you're watching this on YouTube, subscribe and share with a fellow trader. All right, see you in the next video. Have a profitable week ahead.